Hey everybody, welcome back to another Sunday Night Live. Sorry about the delay. I am going to check to make sure that my sound is okay, and we will have our Sunday night discussion. Appreciate everybody who joins the discussion. Also, who is subscribed to the channel. If you're not subscribed, please don't hesitate to subscribe to the channel if this is something that you find interesting or topics that you want to explore going further. Also, don't forget to hit the like button and because it helps to push us through the algorithm, but not only through the algorithm, it also allows you to get similar content if this is something that you're interested in. And then also, if you are watching the video on the replay, don't forget to hit the hype button below. If there is one, it should be a shooting star, and it hypes the video. So let me know how you guys are doing. Like I said, I'm just going to check for my sound real quick, and we'll get started just to make sure whoever decides to join us later on or decides to do a playback of the show, it sounds okay. So, and if anyone's in here tonight and wants to make sure the sounds okay, let me know, and we'll jump into it. So, let me just see. Make sure the sounds okay. Okay, so on my end, it sounds okay. Hey, what's going on, David? Thanks for joining us tonight. Sounds good. Okay, perfect. Yep. So I appreciate your time. So we'll first start off, as we have been doing lately on the lives. Of course, we'll start off by exploring the mortgage rates. Hey, Alex, how you doing from South Georgia? Hopefully everything is going all right with the sale down there. We will explore the mortgage rates. If you guys do not know, mortgage rates did go a little higher this week. So we will see where they're at right now. Again, we're looking at Mortgage News Daily. So let me make sure this is large enough for you guys to see. We're looking at Mortgage News Daily, and we're going to check out these rates real quick and then get into the discussion. So the 30-year fix is at 6.81. As you can see, it went as high as 6.85 this week, and it softened a little bit to 6.81. That's conventional 30-year. The conventional 15-year is at 6.34. The jumbo is at 6.9. The ARM is at 6.39, FHA is at 6.37, and the VA is at 6.39. Those are both 30-year fixed as well. And again, this is according to Mortgage News Daily, and these rates are average national rates. So you could possibly get something above, something below, or maybe something at this price when it comes to your rates being factored into your home loan. But again, this is a conversation you'll have more with your lender to see where your rate might be at according to your circumstances. All right. So we're going to jump off of the rates. Did it real quick today. Didn't want to keep it lingering too long. Cole Texita, hey, how you doing? He says 100 in Denver. Ooh, it's hot out there. It is hot and miserable here in Omaha too. Ooh. Yeah, it's not hot where I'm at right now. I'm currently back home and visiting parents in New Jersey again. So, so it's not too hot up here. It's hot, but it's not too hot. All right, so of course, like we said, sellers are slashing prices, mortgage rates are going up, and some agent stuff to avoid. So we'll talk about that too. It's basically based around story time, I guess, in regards to me working in this industry. So let's first get into 5 cities in which sellers are slashing prices. So let's see if anybody's cities made the list, how you feel, and what are you seeing in your area if you want to let us know. So according to Realtor.com, it says sellers are still slashing home prices in these 5 cities. So this was actually put out May 22nd, 2026. So they might still be slashing prices because we are in July now, but they're sending this right now. It says home buyers who have been staying out of the market, waiting for prices to dip, may be running out of time to snap up that deal. So they're saying that they feel like prices, and I've been hearing a lot of talk about this, that a lot of people, even the, the head of Compass, I was going to play this video, but he also feels like prices have bottomed out and he doesn't feel like prices are going to go any further down, and that he feels like things are going to rebound now. I don't know how you guys are feeling. I still feel like that it also depends on the market that you're in, depends on what's happening, depends on if you have a lot of supply, depends on so many factors. So to give that generic type of sentence I don't agree with it, because we don't know what's going to happen tomorrow, next month, don't know anything. And again, it's according to your market. says, while the share of active listings carrying a price reduction remained elevated by historical standards at 16.7% in April, they are less common nationally than they were a year ago, suggesting that prices are settling where they need to be. However, in several markets, price cuts remain common, led by Phoenix, where nearly a third of listings, 29%, carried a price reduction last month. Phoenix was followed by Tampa, Florida, 25%, San Antonio, Texas, 25%, Denver, Colorado, so where you're at, Cotexita, at 24%, and Portland, Oregon, 24%. So this is where they're seeing higher price cuts. Put simply, homes are not moving in these markets, says Realtor.com senior economist Jake Krimmel. That's down in part due to an amp supply, but also an anemic demand at current prices and interest rates. Phoenix and Tampa also top the list of the major markets with the most price cuts in April 2025. So they're saying even a year ago, they were seeing those gigantic price cuts, which with price cuts, they were all way to, let me see, I think we kind of know some of this. So incidentals of 31.31%, 29.31% respectively. Let's go down. Let's kind of get some new data because I think everybody kind of knows some of that. All right, we'll cover. Of the markets with the most reductions, 4 out of 5 have seen fewer discounts than last year, indicating that prices perhaps a bottom is near. So again, just with the Compass CEO, was it CEO? I got to remember. I don't want to quote it wrong. But just like he stated that he believes that we are at the bottom in regards when it comes to price cuts, and that they believe that we won't see any more. So if you are a buyer sitting on the sideline, you might want to, they're trying to tell you that you might want to jump back in the market. Again, I tell people it's not about jumping into the market. It's not about rushing back in and creating another FOMO situation where people kind of did in 2020, 2021, 2022 type of, where everyone was telling them that if you didn't buy now, prices were going to continuously go up and you wouldn't be able to enter into the housing market. So we had a lot of people who fell into that FOMO because, again, remember, this is a sales field, you guys. Everyone is trying to sell you something. So do not fall into the sell tactic of everyone telling you that. You better buy now. Prices will never go down. You better buy now. You're going to miss the wave. You better buy now. Don't fall into that. Be very conscious to understand you buy when it makes sense to you and your budget and how you and when you need to purchase and what makes sense to you. You don't buy based off of people telling you need to buy now because this is not going to happen or this is not going to happen. No one has a crystal ball. No one knows when anything is going to happen. So even if someone tells you that we are near the bottom and perhaps they see the bottom, they don't see it going up, down anymore, it's just going to go back up. We don't know. We don't know, you guys. All right. It says price reductions decreased nationally with 16.7% of listings reduced last month, down from 17.9% a year earlier. Sellers appear to be adjusting expectations up front rather than testing the market with higher prices and cutting later, concludes Realtor.com. So they're saying, again, right here, it says appears to be adjusting expectations up front rather than testing the market with higher prices and cutting later. So according to this, from what I'm reading, is that sellers are pricing according to market, according to what they're saying, instead of going higher and cutting prices. They feel like sellers are adjusting to the times, adjusting to their location, adjusting to what the homes are selling for, and they're, instead of putting it higher and just cutting it and kind of chasing the market. It says this year has seen both fewer prices cuts and lower medium list prices, suggesting sellers have internalized the generally more buyer-friendly market conditions and are adjusting price expectations before rather than after listing. This is consistent with survey findings showing that sellers expect to make more concessions even as they expect to be more likely to get their asking price, he says. The reductions seem to be working as medium days on market came down 5.5 days from March, though they inched up 2 days year over year. So again, this also is based off of your market, right? You might see some states or some cities or local areas where people are pricing their houses still, according to their market, might be high, very high, because nowadays real estate is just astronomically high. And because they have low inventory or not enough houses popping up in a certain area where people might want to be, you might still see people overpaying for houses depending on where you're at. You might also see people not giving seller concessions. So you got to understand your state. You got to understand what market you're in to understand if it makes sense for you, as far as the cost. Like I tell people, buy what makes sense to you, your budget, and your future budget. And I know people are like, well, you can't predict your future budget. No, you can't. But what you can predict is where you're at now. If you're comfortable there, if you purchase below and have a mortgage, below what you're comfortable at, you can predict that over time, property taxes might go up, right? You can predict over time, your home insurance might go up, right? Because as things inflate, prices go up. And then in the economy generally, we always have ups and downs. We have recessions. We have good times when stuff get inflated. And that's the reason why we have recessions sometimes, right? In order to deflate what overinflated. And so because of that, we adjust accordingly. So we don't buy during inflated markets. We wait till they soften, and then we buy that makes sense to our budget, and we try to price according to our future budget. Okay? So hopefully that makes sense. Kotex said, it looks just like your office in Atlanta. Right? The background ain't never changed. Overall, David said, I feel sales will cool off the rest of the year, especially if rates remain elevated. I feel the same way too. I feel definitely sales will cool off. I know they have been saying recently that sales are down. And of course, sellers are pulling their houses off the market because they're not getting what they want for their houses. So a lot of them are pulling it off. Rates are elevated now. So with the elevated rates, it will soften demand. It will soften sales. And I know some people are still forecasting that sales will actually grow. I've heard some people say it will grow. I don't know. I can't tell you yes or no, but I could tell you one thing, that the rates are up, and the way things are moving right now, I honestly don't really see them getting down no time soon. I really feel like and this is just me predicting, I don't have a crystal ball. I feel like we're going to hit the sevens by the end of this year, as far as rates. And, like I said, I could be wrong because they're with the UBMS 30-year and the 10-year Treasury, they did have some positive gains per se before the weekend kind of started. So come Monday, we might see a soften of the rates some more to go down. But I think just because of all the conflict and all the other uneasy circumstances and the volatility happening right now in the economy, I believe that we might see rates in the sevens. Hey, what's going on, Lang? What's going on? David said, it's hard to jump into a market when things are unaffordable. Yes, I agree. It's very hard to jump into a market when things are unaffordable. Kotek Sita say, found affordable housing in Colorado today, but it's in areas with no jobs really. And that's another thing too, right? Kotek Sita, that the affordable housing typically is further out where it's no jobs that somebody might want. It's not as, I guess you could say, built up per se. And because of that, you have less people wanting to travel out there. It was one time, as we know, during the pandemic, that some people bought further out and felt comfortable enough to want to commute to their job an hour or two in. But now how things are going, how prices are overinflated, most people don't want to pay no more for gas. They don't want to pay $5 a gallon for gas no more to go to work. They don't want to ride on the highway and sit in traffic for 2 to 3 hours no more. There's a lot of circumstances that are now attributing, because at that time people were able to work remotely from home, and now they're like, I'm getting called back into the job. And so because of that, people are seeing, their expenses going up, and they don't really care for that. David said, I'm afraid you are probably right on that. Yeah, I don't know, David. I don't know. I feel like it's going to be in the sevens, to be honest. Hey, what's going on, Corey? Thanks for joining. If you guys have anything you want me to, kind of talk about, let me know as well. But let's get back to this article. So it says, discounts remain less common in the Northeast, 10.2% of listings. So again, like I said, it's based on the market you're in. Northeast, they're seeing less discounts. In the Midwest, 13.4%, where inventory is tighter and demand is higher, compared with the South, where you see 18.8%, and the West, 17.9%. So you're seeing more of those price cuts down in the South and the West, and also them willing to give concessions as well in those areas. And you're not seeing it as much in the Midwest or in the Northeast states because the inventory is a little tighter. However, it is the South that saw its share of reductions lessen the most, with a 1.8% fewer share prices cut than this time last year. And I know a lot of people feel like, okay, 1.8%, that's not a lot. It's very small of a cut per se, but at the end of the day, any cut is a cut that helps towards affordability, right? Slightly more than the national. The West is just behind at 1.1% smaller share of listings with cuts year over year. All right, and so it says, not coincidentally, these are the areas that have seen medium list prices dip the most since April 2025 at negative 2.6% and negative 3.1%, respectively, indicating that buyers are beginning to put their toes into the market as prices accumulate. I mean, not accumulate, acclimate. So let's see, it says Arizona, #1 in price reductions. So it says, this is Paul Mosley of, let's see what he said. I'm trying to see. I think he's just talking about what he's seeing in his market. So we don't have to really dig deep into that. But yeah, so basically these are just realtors in different markets stating what they're seeing. So basically, as mentioned, sellers are coming to their senses depending on what market they're in. They are, cutting or pricing their house accordingly when they first enter the market. They're not overpricing, depending on where you live at again, right? They're not overpricing their houses when they first enter the market. They're pricing it according to what they're seeing as far as closings. Like I said, I would say the areas that are affordable housing are good for people that work from home for home permanent remote positions. Yeah, the affordable housing, like you said, it probably would be good for more people who work from home, right? The only thing is that you have to always be mindful that we don't know what can happen tomorrow. And that's why I always tell people, like, I know you can't predict what's going to happen in the future, but what we can do is we can try to safeguard circumstances, right? And I'm not saying don't live your life or do things because of X, Y, and Z, but it's like, okay, let's just put stuff in place in case these things happen, because sometimes it might not happen at all, right? So if you are going to work from home and you are looking for affordable housing, you're currently working from home now, you're looking for affordable housing, you have to move further out, just make sure, like, okay, if my job ever turned into a hybrid situation, if my job ever let me go, if some things were to happen, would I still feel comfortable enough to be so far from the area where most of the work lies within your field that you still will have the funds to be able to drive to work with the gas? And maybe if you're in a state that has a lot of tolls on your way to work, I don't know, but would you still be okay and comfortable to afford that on top of your mortgage, on top of your utilities, on top of any maintenance that you might have to upkeep, on top of all those additional expenses if you have children, the children's activities, because kids still want to be involved in activities. So all those different things that you got to account for, that I think sometimes we as people don't account for. We just look at one thing singular, and we look at one thing, say, okay, the mortgage costs this, and because the mortgage costs this, I'm okay. Instead of looking at the whole picture, where it's like, as a buyer and as a seller too, you guys should create like a actual write down on a piece of paper your finances. Understand where your money's going to and how much is coming out, because maybe you might be a situation where you're paying child support. Like, again, I don't know people's finances, right? So every month this is coming out for child support, and now you're factoring in a mortgage, and then something might break in your house, or maybe you have a car note, and like my car, you have car problems, right? And so you factor in these things that may not occur or may occur, and make sure it makes sense with the way you're living day to day outside of just a mortgage. And factor in property taxes, all those HOA fees, different things like that. So Code Texita said one house has been on the market for over 500 days. Code Texita, I'm like, it's a house that a client sent me recently that's been on the market for 415 days. So these houses are sitting depending on where you're at, and people have not come to their senses to want to drop the prices accordingly. Like, they're slowly doing these slow cuts. And in the background, when I look in the background, I'm like, you're slow cutting, but you're refinancing. So we're having some type of distress, some type of pain somewhere. We're pulling money out in order to slow cut in the front, but on the back end, you're struggling. So what are we doing? Are we going to try to alleviate the situation? Or are we going to try to keep slow burning through the situation? It's just that some people are gun-ho on feeling like, I want this and I don't want to get anything towards nothing, or I don't want to give up something. And I keep telling people that your house is only worth and I know people don't like to say this, but your house is only worth what somebody's going to pay for it. That's why you'll get people that'll price their house according to the market, and you'll get a lot of people that'll come in, they'll overbid on the house sometimes, right? And that seller will get more money and they'll be happy. But again, these buyers found value in what your house was worth, so they paid more for it. And then you have some markets where people are like, I'm not buying that house for that amount of money. And then you don't get nobody. So you find yourself sitting on the market for 500 plus days, or you find yourself sitting on the market, pulling it off, putting it back on. There's several houses in Metro Atlanta where I see a bunch of, they try to sell in 2023, 2024, 2025, and they pulled it off, put it on, listed it for rent, put it off, put it on. And it's like you're doing all these gymnastics as far as trying to get the house sold, instead of just adjusting the price accordingly to the area to make it make sense for someone to come in and possibly purchase the house. So, you know, to each his own. Hey, David, yes, hit the like button, you guys, please, for the stream. It allows this to get out to more people. And if you're interested in this similar content about real estate, it allows you to get other content like this in your algorithm. Many of those places don't have broadband. Oh, he's talking about the lane. Yeah. And said, we're also required to have a hard line for security. Okay. He said, a 500-day house and 180 miles from Denver near Nebraska border, quite a commute to anyone out there. Hey, you know, that's the thing. Are you willing to take those commutes? And so let's get into this article in regard to, so I wanted to also talk about, and then I'm going to talk to you guys about realtor situations. You know, I'm not going to mention, you know, I don't mention people's names in them, but okay. So I also want to talk about this article that realtor.com wrote, as far as like called, is buying the worst house in the best neighborhood still a smart move? So, because I know you hear people say to you as well that maybe you buy the worst house in the neighborhood, you renovate it and you fix it up, and you know, and then you create the value from that. So we're going to see what realtor.com kind of says. But I tell people, you want to buy what makes sense to you. And I'm going to keep saying that over and over again. You buy what makes sense to you. If it doesn't make sense for you to buy the worst house in the neighborhood, don't buy it. If you don't want to put the renovations, the sweat equity into a house, if you don't have the funds to do so, because everybody doesn't have the liquidity or liquid, whatever, cash, you know, to put to do renovations in the house, and you don't want to take out a personal loan. You don't want that additional debt against you. So it might not make sense for you to buy the worst house in the neighborhood to renovate it, right? Because everybody don't want to do that. David said, amen, your home is only worth what someone is willing to pay for it. No truer words have ever been spoken. Yes, David, it's only worth what someone is willing to pay for it. I tell people, you can't get the price or the equity that you say you have in your house without somebody buying it from you. So Lang said, oh, okay, we can definitely keep that in mind. Yes, keep it in mind. Keep it in mind. It priced at around $100,000. Oh wow, $100,000. How is that like in price point in that area in Colorado? Because that's pretty cheap. According to nowadays, you know, affordability scale. $100,000 is you make it out like a bandit. It says the math on a money pit is buying the worst house in the best neighborhood still a smart move. So according to this is realtor.com and put out July 2026. Buy the worst house in the best neighborhood has long been treated as a golden rule of real estate. The thinking is that you get access to a desirable location at a lower price. Then as the neighborhood's more expensive homes appreciate, yours may rise in value too. But the cheapest house on the block isn't necessarily the most affordable when mortgage rates are hovering 6.5%, property taxes are rising, and even a small renovation can quickly turn into a 5-figure project. So I agree in the sense of renovations can definitely turn into a 5-figure project, especially nowadays because of the inflated prices. Mortgage rates, of course, they are higher, and property taxes, right? Depending on the area that you're in, and home insurance and all those things as well. So we'll see what they kind of say. Freddie Mac reported an average 30-year mortgage fix of 6.55 mid-July. We already know all that. Found the effective property tax rate on single-family homes rose 0.9% in 2025, its highest level since 5 years. So does the old advice still hold up? Can it? But today's buyers need to look beyond the listing price and ask what they're actually getting for their money. So again, even let's say the house in the neighborhood, let's say you're in the neighborhood and every house is $500,000. And the ugliest house or the worst house or the most affordable house is $350,000. To someone else, that's still unaffordable, right? So are you willing to pay $350,000 and then pay these 5-figure possible renovation costs to bring it up to standard, doesn't make sense. I don't know. We'll have to see what they say. David says, look at the cost of renovation. Yes, David, the cost of the renovations are super pricey. I was just my buyer I was working with, we were talking about, because they had a plumber come in because it's leaks happening. It was leaks happening in the house. And just when they did the quote on like fixing the leaks and then doing the lines, because there was some corrosion and all this stuff happening, and replacing lines, pipes, and all this stuff because it was copper plumbing. And they quoted her dag near close to what, $10,000, like 9,000 something dollars. So just something as simple as that, and kind of getting those things done, repaired, and all that stuff, is like, that's almost 5 figures right there. So we don't know how much renovations are going to be, because unless we have a contractor come in, and yes, we can do quotes, right? You shop around, you get quotes, you see what people are offering. And just because it's the lowest quote don't mean it's the best quote. And just because it's the highest quote don't mean that they're great at the job is great either. You just got to find the best person for the job, that is not there trying to rip you off. Cortex said, well, halfway between Denver and Kearney is Nebraska. That's about right. Okay. So that's about right with that price. Okay. Let me get rid of this. Oh, Jesus. Okay. What does buying the worst house mean? First of all, it is rarely recommended to buy a house with a cracked foundation or water pouring into the basement. Yes, we don't buy houses with cracked foundations or water pouring into the basement. Typically, you'll have investors kind of buying those things, and hopefully they repair them, because every investor that buys cracked foundations or water problems, they don't repair them. Unless you have the monetary means to fix those problems immediately. When people say to buy the worst house in the best neighborhood, they usually mean the house that is smaller or less updated than the homes around it. Excuse me. So basically, they're stating that realtors are telling you, or people are saying, to buy a house that has everything else and has great bones, structural issues, everything is great in it. However, maybe, you need to update the kitchen. Maybe you need to update, paint the walls, or maybe you need to take that judge paneling off the walls, or the wood paneling from these older houses off the wall, or scrape the popcorn ceilings, and different things that you could possibly do by yourself, but not actually need to pay several figures for it. He said, wow, Clark, we missed the boat. We should have become plumbers. Exactly, David. I was looking at that plumber quote. I'm like, Jesus, I'm like, dang, I'm in the wrong area. And even when I saw one of my clients had got a quote for a driveway, and they quoted him $10,000 something, I said, to put cement down? And I'm like, and I know, I'm like, I'm like, wow, this is crazy to me. I was like, to put cement down and all these things, I'm like, yeah, this is crazy. So I'm like, sometimes I'm in the wrong arena. Call Jen to get some training. For like to do the jobs and everything. I know Jen be over there. She be doing all those projects and everything. Jen be on it. I love it. And my dad said, yes, David. Yes. Yep. So, all right, let's see. It says it could have an outdated kitchen, worn flooring, or a one-car garage, while nearby homes have two. Those drawbacks may be inconvenient, but they're different from structural or environmental problems that are difficult and expensive to repair, to fix, basically. There is a difference between a house that needs new flooring and paint and one that has foundation issues, which we know water problems or other problems. And so right here it says, this is talking about short sales. We kind of talked about that on the last live. Let me see. It says a lower monthly payment doesn't always mean more affordable house. The strategy of going with the worst house can still help buyers enter a neighborhood they otherwise couldn't afford, but your monthly mortgage payment is the only starting point. So again, just because you're going for the worst house, do you have enough in your budget to be able to fix those things over time? Do you feel comfortable buying the worst house in the area with those small little possible repairs, like the paint job, or maybe putting new carpet in, or different things like that? Because carpet is costly too. I remember we did a quote on carpet with a carpenter, and I was like, this carpet, I'm like, $2,300 for this room that's this size? I'm like, oh, okay. And they were like, well, it's also based on the grade, the texture, the low grade is this amount. I'm like, I'm like, baby, I'm in the wrong field. I'm like, I need to go and go into the trades, because baby, these tradesmen, they make a lot of money, and I know they do. I know a couple that make 6 figures a year. Let's see. And so, and again, like, are you able to buy the worst house, even if it's still more expensive? Like, it's not super expensive than everything else in the block, but maybe, like I said, maybe it's $200,000 cheaper, right? However, you still have that monthly mortgage payment, and are you able to take the money that you're getting from your job and slowly but surely make these, do these DIY projects and do repairs and do sweat equity without having to hire somebody to do it, and kind of bring everything up to standard, and without also taking out a personal loan, another loan, or doing a HELOC, or doing any of these different things to cause more, debt per se outside of your current mortgage, because we don't want to do that. Even though we talk real estate over here, but real estate is finances too. We don't want to create more debt. We are in the sense of alleviating debt. You can buy the house, but you don't want to add more debt on top of the house, right? So we want to alleviate it. Alleviate it. A lower price home is not always the more affordable one once you add everything together. So that's what me and David were kind of saying, like, renovations could be 5-figure renovations. It might not always make sense. Taking a fixer-upper in Austin, Texas as an example, the median listing price is about $589,000 according to Realtor.com. Imagine two similar homes in the same neighborhood. One is updated and listed at $590,000. The other is the worst home on the block listed at $540,000. Well, shoot, if it's listed at $540,000 and it's only a $50,000 difference, I ain't buying it. I ain't buying it. I'll buy the worst house in the neighborhood, baby. It got to be like $200,000 cheaper. I'm like, I'm only gonna go down $50,000 and then turn around, and it might cost me $50,000 or $60,000 to fix whatever's up in the house, which boosts a tempting $50,000 discount. I'm sorry. At first glance, saving $50,000 sounds like an easy decision, but what if that cheaper home also needs a new roof? Exactly, which runs at average of $5,400 to $12,000. It depends on the roof. Because it can cost more than that. But again, maybe this is based off of what he's seeing in Austin, Texas, because I've seen roof quotes at $16,000 and $20,000. So yeah, it just depends on where you're at. Kotex Caesar said, I work with tradesmen. If you don't own a business by age 55, you're broken down and have to retire. Oh, wow. David said, you go from Clark the Realtor to Clark the Contractor. I know, right? We put on all the hats. I'm going to vocational school, the vocation school. So new flooring installation, which could run $3,280 to $12,364. So again, floor installation, I don't know if he's talking about, hardwood flooring, planks, laminate. I don't know what type of flooring, carpet, because again, those costs add up. An HVAC replacement, which could run $7,000, basically $12,000. And I've seen HVAC replacement run more than $12,000. I've seen it run as much as $15,000. And 2 bathroom remodels, which could cost $13,000 to $37,000 each. Suddenly, you've added up more than $100,000 in repairs before accounting for surprise costs that could pop up once walls are open. And this is what I always tell people too when we go to see houses, and we have. I always tell my clients, like, when you buy a house and you had a home inspection, everything is from what you can see from eyesight, right? Any latent defects or those things that you can see from eyesight. And we don't know what's behind the walls. We don't know how the electricity was assembled behind the walls. We don't know if there's any mold for possible, if there was water damage in this house and they had a contractor come out and fix it. We don't know how they fixed it. We don't know if they replaced the wood. We don't know if they remediated any mold that might have been in that wood. So all these things you don't know behind a wall. So like they stated here, what if you decide to renovate your whole kitchen, right? You go and renovate your kitchen or even your bathroom, and you start pulling the cabinets from the wall. And, and the plaster breaks, everything breaks, the sheetrock, and then you get behind the wall, you're like, whoa, it's a bunch of black mold here. It's this here. Like, you don't know. So it could cost you, Those renovations also come on top of your monthly mortgage payment, closing costs, property taxes, home insurance, routine maintenance. In a state like Texas, where homeowners insurance premiums have climbed sharply in recent years, those ongoing costs can make the cheaper home surprisingly expensive to own, especially if the home is cheap as a result of damage caused by a natural disaster. So when buying the home, the worst home may still pay off. So this one, they say it could possibly still pay off. Buying the worst home is more likely to work when its problems are mostly cosmetic, which we kind of talked about earlier, painting, little cosmetic stuff. Price leaves room in more your budget for improvements, and you plan to stay long enough to benefit from the work. I do agree with that too. Planning to stay long enough, because if you're planning to buy a house and then you're moving in the next 2 to 3 years, it doesn't make sense to do these repairs. Like even somebody too, if you're planning on selling the house now and to turn around and go and put new countertops in and do certain things, some renovations or repairs per se or updates, they don't make sense to sell, because you're not going to get the value back when you sell the house, because everybody's taste or what they like is subjective. That's one thing about people. We're very subjective. So one person, maybe the granite countertops is the creme de la creme, but maybe somebody else might want a marble countertop. I don't know. And so to them, they feel like granite ain't worth what marble is worth, and I'm not paying this because I don't want the granite, So it's like sometimes it might not make sense for a seller to go and start renovating certain things, or say, hey, before I put my house on market, I want to do this, I want to do this. It might not make sense, but it might make sense to do certain things, like, if there's a leak in the roof, yeah, you want to repair the roof, right? Because no seller is going to want to move in. No buyer is going to want to buy a house with a leaking roof, right? And then also that could also trigger things with like lending and financing too, right? Depending on your loan. And then, different. So you got to assess the situation, right? And also assess what type of pool of buyers you want. If you are a home seller that's trying to sell a home, but let's say your deck on the back is falling apart, the wood is flimsy, and somebody can fall and like break their neck or whatever. If someone is coming in with an FHA or VA loan, they probably 9 times out of 10 will require you as a seller to repair that before they hold a loan. And then maybe it might not be such of a tighter requirement for conventional or somebody with cash, of course, right? Because the financing is different, the terms is different, the things in which trigger lenders are different, right? And if you're in the state of Georgia, if the house has termite damage, right, the lenders assessing stuff according to the house. And if the house is being eaten up by termites, they're not going to want to finance it. So it's certain things that you might have to get done. And there's some things where it's like, no, I wouldn't do it. If you're trying to sell the house, and if you feel like you're a seller that you don't want to put as much in that you're not going to get out of. So you got to kind of understand what you're doing as far as that if you're on the selling side. So Kotex said, LOL, I'm too old to be running pipe in a crawl space. That's where the pipe was at. It was in a crawl space. David said, I did one roof in my life, never again. It was an easy roof. Anyone that does that type of work has my respect. Yes, roofing is definitely very hard. I remember when the roof guy came out and he climbed up that ladder, and I tried to get up there and climb too, and then I realized, I can't do this. I was like, I'll go in the attic with you as a home buyer. I'll go in the crawl space with you as a home buyer. As long as we go together. I'll go with you in the basement. I'll go with, but to be doing these other jobs for safety issue, we want to make sure we live in tomorrow. I'm about out. Kotex said, and sending an 8-year-old into the crawl space is considered child abuse. Yeah, you don't want to send the 8-year-old. Definitely child abuse. So it says it may also make sense if the house is comfortable and functional as is, allowing you to complete projects gradually rather than remodeling everything before moving in. But renovations don't automatically translate into equal increase in home value. The annual cost versus the value report. So this is what we're talking about: understanding the cost and the value of everything, which compares remodeling costs with their estimated resale. Consistently shows the homeowners recover only a portion of what they spend on many projects. Every neighborhood has a general price range, and it is possible to put more money into a house than the neighborhood values will support, which is true, because I see currently right now a homeowner who bought a home in a neighborhood that doesn't support that value, and now they're trying to sell it, and it's not moving. They bought a house in a neighborhood where the peak value of that neighborhood is about $800,000. When they bought this home, they bought it for $950,000 something dollars, and now they're trying to sell it for like 1.2. But the neighborhood, even with prices inflating, and like I said, in Metro Atlanta, prices are softening. So now no one sees themselves buying a home at some million. But that person, they did buy the house in cash, because I went, even though it wasn't somebody I helped, I'm just nosy, so I look at everything. So I went and I saw and thing it said that he paid cash for it in 2022. And so because of that, I already knew in my head, I was like, he's not this man, because a man in the buying to pay cash. I was like, he's not going to get a return in this house. The value in this neighborhood has peaked here. And what's happening right now in Metro Atlanta, that's why I'm telling people, don't overpay for anything now. Whatever the house is priced at, I don't suggest you overpaying for it. I don't care if there's other people bidding on the house. I don't care if the agent say, oh, we have multiple offers. At the end of the day, if you as a buyer, if you feel comfortable doing that, I don't make that decision for you. You make your own decision, right? I just advise you, I educate you, and I hope, and at the end of the day, you make your own decision. And with that, I always tell people, it's not always, great to overpay for something in a declining market. And because of that, I tell people, the best option might be to go on at, if you want to go on at the price in which they put on the market, try to get concessions that way. It makes sense. You might want to go, depending on how we're seeing stuff close, you might want to go under 2, right? But I'm not a fan of going over. But at the end of the day, I can't tell you what you want to do, because I've seen people where they go over because they really want this house, right? And they're able to be in bidding wars. Yeah, I'm like, Before making an offer, estimate the home's potential value after the work is completed. Then compare that figure with the purchase price and a realistic renovation budget, including room for costs to run higher than expected. The real housing affordability test. The most important question isn't whether you're getting the cheapest house in a great neighborhood, it's whether you can afford to own that particular house without putting the rest of your finances at risk, which we talked about earlier. We don't want to put our finances at risk, especially in this current market that we're living in. We don't want our finances at risk. We want to buy a house. If you want to buy a house, because everybody does not want to own, but if you want to buy a house, we want to buy a house responsibly. That's what we should say. Responsibly, financially, and make sure it makes sense to your budget now and hopefully your budget in the future, because we can't predict what will happen in the future, right? Would you still have an emergency fund after closing? Could you handle repairs that could cost more than expected? How long could you comfortably live with outdated features? And would you still be happy with the purchase if the home didn't appreciate as much as you hoped? Or would you still be happy with the purchase if you just decided, you know what, I don't have the money to do the repairs or updates or whatever. So I'm not, not repairs, but to do the, cosmetic updates. Like, I don't have the money right now to paint the walls. I don't have the money right now to put new carpet in, all this stuff. Are you still comfortable enough to live with that, knowing, in regards to what you bought? Buying the less updated house on the block may still be a good way to get more location for your money, but if the renovation budget leaves you house poor, the worst house might not be the bargain it appeared to be. So let me know your thoughts in regards to that, you guys. Would you buy the worst house in the neighborhood in order to get in a particular neighborhood, or maybe it's a particular school district that you want your children in? Because I do see people do that too sometimes, where they'll just buy a house, even if it's not what they want or want to settle into, just because they want to be in a school district and that's all that they can find, right? And then a couple years later, they're like, okay, we want to move. We don't really like this house. And right now, like I said, in this market, Metro Atlanta, we're seeing a shift in prices, and so you might be short selling, or you might be under. So it might not make sense, And I know a lot of us, we move with emotion, which makes sense because we're human. So we are emotion. We have our emotions involved, but sometimes we gotta, we have our moment of outbursts of emotion, and then we sit back and we reassess, and then we move forward to make the right decision for ourselves. Everybody's calling me and texting me now. My sister's calling me now. Give me 1 second. Let me let her know I'm on my live. Sorry, guys. Call you after. And then I got to send something real quick. Let me know your thoughts, you guys. I'm sorry about this. I have to also send over another thing real quick. Okay. All right. Give me 1 second. I'm sorry, y'all. Just need to send this stuff over. All right. Let me see. This. Let me see. Sorry, y'all. I know y'all probably like Devon. Please. All right. Just gotta send this over. Hold on. Did I send this in order? Okay, there we go. All right, so now let's talk about, again, we'll just touch on a little bit because we did talk about in the beginning, mortgage rates. So they're saying mortgage rates jumped, to 11th-month high. Even so, they said some home buyers find opportunity in increased inventory. So they're saying that even though the rates are up, there are some home buyers that feel like, okay, rates are up, no problem. It increased, the inventory is increasing now, or staying on the market because most people are starting to sit on the sideline because they feel like, can I take on these payments with these increased rates? So let me know your thoughts. Would you guys take on, these higher interest rates? Since you might have more inventory depending on your area. It says mortgage rates increase again as market contend with rising fuel prices and higher inflation expectations. And the week ended Thursday. So again, this article was put out July 2026. So rates have gone up again, as we know. They're talking about the average 30-year fix was 6.58 according to Giant Freddie Mac. Says the 15-year was at 5.96. We already went through this, so we don't have to stay on that. It says daily mortgage rates, which are typically more volatile than weekly averages, saw an even steeper increase, as we know. As of course, we know fuel prices have been rising as of the ongoing conflict in the United States in regards to overseas as well. That's what I want to see right here. Okay. So it's basically saying right here the average 30-year mortgage rate calculations. So they're showing you what the average 30-year mortgage rate calculations are compared to the date 5 years ago, home price, 30-year fixed, monthly payments, interest over the term of the loan, and then the total payment that you'll pay in totality. So as we all know, you can get this interest over the term of your loan if you go to your amortization, as we did before. Amortization calculator can tell you the interest over the term of your loan. So it says 5 years ago, if you bought a house, and I don't know what area this is in, but I guess it's just based going by nationwide prices. It was they said about $400,000. So wait, actually, hold on. I'm wrong. Sorry, skirt that. I think what they're doing is they're just equating $400,000 to every year. So if you did it 5 years ago, $400,000, and you had to, and 5 years ago, as we know, the pandemic happened, mortgage rates dipped down, so they were 2.8%. Your monthly payment will be $1,639 at a $400,000 home loan. Your interest over the term of the loan will be $190,000. Your total payment will be $590. A year ago, $400,000, 6.74, $2,500, almost $2,600. This is the big difference right here. You're paying over term $533,000. So you're paying $933,000. So that's a big jump with that interest rate being here, with this interest rate being here. And as of today, with the rates being 6.58, which we know is higher now. So let's kind of look at it over here with this number, because we're at 6.81 nationally on an average with mortgage rates. But they said when it was 6.58, it was about same amount, 2,600, almost like 517. You're paying 9,1700. As far as overall totality, again, if you do pay more frequently, you can kind of cut some of this interest down. We're not paying this full amount in interest, but if you take that 30-year fix all the way to the end, you can find yourself paying this much of that interest over the term of the loan, which is a big difference compared to, that what it's looking like now. So that's what that's really what I wanted to show you guys with this, because everything else we kind of went through as far as that. I just wanted to show you guys the calculations so you can see. Let me know your thoughts. How do you feel about those calculations and where that's at? And then I wanted to also, let me see, sorry. But yeah, so I also wanted to kind of talk about agents to avoid. So, and the reason why I talk about this is because I experienced these agents. If you guys, of course you watch, Jen, Jackie, and everybody, they talk about a 20% agent, a 10% agent. I say it's a good person, a bad person. That's how I look at everything, right? You're good at your job, you're bad at your job. We got people who are at jobs that don't want to be there no more. We got people that could be experienced, but just because you're experienced don't mean that you're great at what you do. And so I always have this debate, I guess I would say, in regard to when people say, oh, when you're looking for the agent, you want to get the agent that has the most sales, the most experience, the most this, the most that. And I tell people, we got to be very cautious. Just because an agent has a numerous amount of sales does not mean they're the best agent, right? If some agents move in the sense of quality over quantity, And because of that, they're looking at you as a number. So they're trying to get as many listings as possible, and you fit into that number bracket. You know, some agents might have experience, but as we understand, we don't experience everything, right? So I tell people you definitely want to be with an agent that does have experience, of course, right? But you also want to be with an agent that educates you, that understands you, that is transparent with you through the transaction, that updates you accordingly, that when you call their phone, they're going to answer. You know, an agent that is there to help you through the process, because every agent doesn't work like that. You have agents that are in it, you know, they say just for commission. But I say this just to tell people, be very mindful with agents that you work with, because every agent is not a good agent. And that's why I put agent, avoid these agents. If the agent is not, if you're a seller on the market and the agent is not contacting you frequently or giving you updates, like every time I list a house on the market, I go frequently check on the house, because especially because in Metro Atlanta, Georgia, we have squatters. Like a house that a client that I'm working with, even though I'm in right now, so I'm not down there yet, but they did call me about a house. I called the agent about it. The agent was attached to a company, so I went directly to the company's line, and it said that the house had squatters in it. So they're trying to go through the eviction process with the squatters. So I don't know how long it'll be there. Because of that being said, if you're somebody looking to sell your house, you want an agent that can frequent checks on your house, you know. Even if, I'm not saying it doesn't have to be week at a time, no, but if it's bi-weekly, monthly, at least just to check in to make sure a squatter is not squatting in your house. Because now it becomes a situation where you have to turn around and go to court to do eviction, right? So you don't want that. So you don't want an agent that's just going to be like, okay, I'm gonna take your house and put a sign in your, I'm gonna whisk off in the midnight and never come back. And then next you know, you just somebody buying your house, and they like, oh, they show up, they're like, oh, somebody at your door. I mean, somebody living in the house. Because I've showed up to several houses where squatters were in them. I've showed up to, even when I was on an open house at one house at one time before, and I went around, I like to go around the neighborhood, pass out, you know, open house form and say, hey, just want to let you know we're having an open house down the street. You never know, maybe you have family members or friends that have been trying to get into this neighborhood, come in, you know, check out the house and pass it on to family or friends that might be interested in the neighborhood. And I went, and it was a guy, and I knew he was a squatter because, one, he opened the door, and there was a super lockbox on the door. And I heard the sound that it makes. And he opened the door because I was knocking on everybody's door to pass out the flyers. And you know, when he opened the door, because like I'm nosy, I peeked in the house. I'm like, what's going on? It was like nothing in the house. And so I could tell that he was a squatter. Like the sign, the real sign, he must have removed from the yard, put it somewhere. But it still had the super lockbox on the door. And typically, as a realtor, when you listen to the house, if it's a super lockbox on the house, it typically means that it's probably a house listed for sale, not a construction box, you know. And so that was another case where the realtor obviously is not around, so it's squatter in the house. So again, depending on your area, that if you have a squatter problem, you don't want an agent that's just going to put a sign in your yard to squat. So avoid those type of agents. Avoid on the buy side of an agent that's not going to sit down and educate you and inform you and take the time to make you understand the contract, make you understand what's happening. Like today, I was talking to my cousin, and as I was trying to do stuff for a client, and my cousin was like, "Oh, when are you coming back to? When are you coming back to? You know, are you gonna get your license in Jersey as well? Because a friend of hers bought a house in Philly, and that realtor never even went through the stuff that I discussed with my cousin that an agent should be doing for you as a buyer." So, and they end up now they're having like a lot of gas leak problems, all these problems. And the person came to check out the house, the gas person said that these problems were here beforehand. They just covered it up. So it's like things that you have to be very careful. So avoid agents that are very salesy. As I mentioned on the last slide, we talked about how I went to an event, a homeownership workshop event with the agents there kind of running the event, and they're very salesy, very pushy, wanted me to like trying to get me to buy stuff too. I'm like, no, we're not doing it. I don't want no salesy agent. I don't sell people. I tell people I'm not here to sell you. I'm here to educate you, advocate for you, advise you. You do what you want to do from there, right? That's why I have a lot of buyers who terminate all the time, and I tell them to terminate. You barely gonna get a realtor that's like terminate. I'm like, terminate this. I know, like they say, a lot of realtors are, oh, we need to save the deal, but it doesn't make sense to save a deal with somebody if nobody else is not taking care of the situation or circumstances. I'm not going to save a deal to take care to just to get somebody to the other side to make a paycheck. And some agents do that. So those are agents to avoid as well, where they're so constantly built on saving a deal to make a paycheck to close something out in a rush in order to take care of said clients. And of course, the seller might not care, but on the other side, as a buyer's agent, I don't want my buyer to experience different things. Can I stop them from everything? I can't stop people from everything. We just don't have that. I'm not, everybody can't stop people from everything, right? Can't stop kids from going out into the world, can't stop things from happening, right? But at the end of the day, you can prevent things that you see currently. Alex said, maybe discuss NAR maximum cap. Okay, I'll discuss that next time. I will have a conversation. We'll discuss around that. National Association of Realtors, if anybody wants to know what NAR is. And so, yeah, so I just want to let you guys know. So there are some agents to avoid. Definitely avoid the sales, these agents that sell. Definitely avoid agents that's just trying to make a deal go through. And if it doesn't make sense to you, right? If the deal is something that you want the agent to save, then you allow the deal to go through, because the deal has to go through according to you as a seller or you as a buyer, right? If it doesn't make sense to you, I'm not saying like be like this hardcore seller where it's like, I don't want to do anything unless I get this. Like we don't say that either. Or like the buyer, like, I don't want to buy this unless I get this. Like we all have to be fair and negotiate accordingly, right? You have to make sense of how you're planning on getting through the transaction. However, you don't want anyone who is overly forcing you to save a deal when you're uncomfortable or if it doesn't make sense for you as a seller or a buyer, right? So if you have an agent that's trying to do that all the time, that's a no for me. And yeah, someone that, that always leads with those things. I would just say, avoid those type of people, avoid those type of agents. So yeah, so I just wanted to talk a little bit about that tonight. Hopefully you guys have a wonderful Sunday. I appreciate everybody being on the stream. And I will see you guys next Sunday. If you have any other questions, have any information that you want me to talk about, have conversation around, just let me know, and we can definitely do so. And I appreciate everybody being here. I appreciate everybody, joining the conversation on the live chat, where it allows us to freely converse in regards to real estate. So, but I will see you guys next Sunday, 7 p.m. Eastern time, and take care. Have a wonderful Sunday night. Bye-bye, you guys.